over here opening up the window, make sure the birds are chirping. Your boy just got in. As y'all can see, I got on a shirt with some green on it. I got on a shirt with some green on it so you can see through me. Uh, just pulled up, just got to the highs. Um, Good morning, good morning, good morning, everybody. If this is your first time tuning in to Tim's Tidbit, I'd like to say welcome. If it's not your first time tuning in to Tim's Tidbit, I still like to say welcome and give you a nice hearty, well, thank you. I just got a text from my sweetie. Starbucks, $25. McDonald's, $2.46. She's telling me to take that out the checkbook because she never takes anything out of the checkbook. Never. You hear me? Hey, what was I saying? If you don't know who I am, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every single day. And I talk about the price action because my intent is to help someone like you get their aha moment when it comes to investing, trading, all things stock market. I get on here and I talk about the price action because I feel like it's very important for everyone to learn how to read the price charts. It's important to know the fundamentals behind the companies you want to invest in, but it's so important. You need to know how to read the charts if you want to be a trader and you want to find the key points in price when you want to make your entry for your long-term investments also. Unless you're just dollar cost averaging in, that's a different story. But if you want to be an active portfolio owner, you need to learn how to read these candlesticks, these charts. And I do it for the free 99. I get on Al Gore's internet once at 9 a.m. Eastern time and once at 6:30 p.m. Eastern time just to help you look at the price action and see what it did and be like, aha, that's why it did that. Aha, that's why it didn't do that. And remember, news always trumps charts. Good morning to everyone except for the eraser liquor. Let's go ahead and get into it, man. All 2023, I'm trying to keep the episodes to 30 minutes. I'm trying to keep them to 30 minutes for 2023. Let's go. Since we're on Al Gore's internet, let's see what news we had this morning. This is why. This is why I didn't ignore the child in the corner that's licking the erasers. Ignore them. Ignore them. My wife keeps the house cold. And I just came in. I just came in from outside. It's cold in Columbus, Georgia, man. The birds not even chirping. It ain't cold. And we just had a storm come through. Anyway, let's go to Forex Factory and peek at the economic calendar for this morning. This morning we had import prices. It's a yellow folder. Nothing to see here, folks. It's a yellow folder. What is import prices? Changing the price of import goods and services purchased domestically. So the cost of our import stuff went up. In my mind, that's not good for us. That's inflationary. That hurts our GDP because we're paying more money for stuff that we're not making. So that's like money we're spending more money on imports. That's how I take that. I'm not an economist. If anyone's an economist, help me out. Let me know if I'm thinking about this correctly. Let me know if I'm thinking about this correctly. I'm laughing at I sent the text to my homeboy. I said, man, why ain't nobody tell me Fred Hammond was a comedian? Man, I was going down a rabbit hole looking at some Fred Hammond stuff. Why ain't nobody tell me Fred Hammond was a comedian? Anyway, And that was at 8:30. And then we got the preliminary consumer sentiment at 10. So that's in about an hour. Be careful. Be careful. That's a red folder. Expecting it to come in at 60.8. That's the consensus. So consumer sentiment. That's like what people think the stuff gonna cost over the next 12 months. Hold on, let me look at it, make sure I'm not lying to y'all. There are two versions of this data released 14 days apart. The preliminary releases early and thus tends to have more. Okay. Financial confidence is a leading indicator of consumer spending, which accounts for the okay. Survey of about 500 consumers, none of them lick erasers, which asked the respondents to rate the relative levels of current and future economic conditions. Yes. So, and I think they be looking at it for, this one right here is the one they be looking over 12 months. Yes. Percent that the consumers expect the price of goods and services to change during the next 12 months. Yes. That's the, the second part of that's the inflation expectations. That's that one right there, where they expect it to go over the next 12 months. And this one right here is the current and future, the same thing, what they think is going to be over the next 12 months. Consumer sentiment. Keep your eyes on that. Let's go over and see our friend. Y'all know who she is. The SPY. Spyleen, if you will. We wrote a song for it. Want to hear it? Here it go. People in the back singing with me. Me, Spyleen, where you at, baby? Here I go. Hey, how you do? Oh, Spyleen, you slipping, you falling, you can't get up. Oh, you slipping, you falling, you can't get up. Spyleen is coming back to the weekly equilibrium. This purple line, this purple dotted line right here, that's the weekly equilibrium. We took out the weekly high twice already this week, right? On Wednesday, we took out the weekly high that we had made on Monday, right? So far, we are in the typical bullish week pattern, right? That's why the other day when I was talking about we had came into this SIBI right here, and I was like, hey, my interest in shorting this is no longer there because we on this day we didn't do what I needed it to do. We went up into the SIBI, sold down, but this day we didn't get back up to the premium SIBI and sell off. We didn't do what I needed to do. I said, hey, my short and their intentions are gone, and I'm glad I followed my sentiment. And how did I come to that sentiment? By reading the price action. Ding, 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 ding. And then, so Wednesday, we took out the weekly high, right? We took out the weekly high. And then Thursday, we took out the weekly high again. And the reason why I'm saying that, because this made a new weekly high on Monday, right? We made the weekly high on Monday. Tuesday, we took out the weekly low, right? And then we took out the weekly low on Tuesday. We went back and took out the weekly high on Wednesday. Price action, right? I got a lash in my eye. Robinson, did you throw dust in my face when I leaned close just then? Anyway, we took out the weekly low on Tuesday, and then that sell side liquidity. Then we went and took out the weekly high on Wednesday. That's buy side liquidity, right? So we took out sell side, delivered it to buy side, right? Once we took out the buy side on Wednesday, Thursday, we opened up. Thursday, took out the buy side on Wednesday. Thursday, we opened up, right? I can't remember if we came down first or not. We came down close to the sell side, then reversed and took out the buy side. Again, boop, we took out the buy because we gapped up. Took out the buy side again. Now that we've taken out the buy side, we are coming back to equilibrium. We are very close to equilibrium, right? So we're coming back. We are right there, equilibrium now. So let's see how this plays out. Will we hit equilibrium and continue to slide into this gap? Or will we hit equilibrium and then bounce and come back up? Let's see. Will the SPY go get the gap, hit this order block, and bounce? Or will the SPY just sell off toward the weekly low? Tune in at 9:30 for another edition of I'm tripping. Let's go over here and look at the ES. Whoa. I see why the SPY is down, down, down. Red Knight going down, 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 down. Red Knight going down. Hey, as y'all see last night, the only stuff I marked on my chart was an hourly buy side liquidity, an hourly sell side liquidity, and an hourly fair value gap. That was the only thing on the chart of interest for me when I marked this out around, what time is this? Yes, around that time right there. Right? Let's just say that candle was in there. I was in here last night doing a little 1-2-1-2. I shared another journal entry of mine with the Black Spiders. If you didn't get opportunity to see that, if you wanted to check it out or save it and make it a part of your own journal and, you know, look at it and read it, I put it in the community section for you if you would like to partake of it. So at that time, as you see, there was nothing of major interest to me. I was looking, okay, we got buy side. Okay, we got sell side. Right? That's the only, I want to see how we react to that. We got the daily equilibrium right there. I'm sorry, the daily equilibrium right there. Right? And I was like, okay, I need to see how we react to this buy side and this sell side to see what we are going to do. Right? That's why I only marked that. I had nothing else that I want to mark. I saw this rejection block down here. Yes, I did see that. I see the rejection block up there. Yes, I did see that. Right? But the only thing in the short-term time frame that was of any interest to me was this 60-minute buy side resting above 4,825 and this 60-minute sell side resting below 39.90.50. Right? And we see how it played out. We came in, we kind of we closed yesterday at 4,250, and then we pushed up pushed up a little bit, and then we dropped it like it's hot, going from the 8 o'clock candle up until the 11 o'clock candle. And that would be the 7 o'clock candle up into the 10 o'clock candle on TradingView, right? The 9 o'clock candle or 8 o'clock candle on TradingView is what created that hourly fair value gap, right? So just after midnight on the 2 o'clock / 3 o'clock candle, we pushed up into right around just above consequent encroachment on that fair value gap. We pushed up a little higher, touching, getting back up to yesterday's close. And we also, on the 60-minute, I can't tell if we wicked down below midnight first, below the midnight open. I didn't say the midnight open. It was 39.94.50. I can't, on the 60-minute, I can't tell which way we went first. We'll figure that out when we drop a little lower. We pushed up above the fair value gap. Got a nice rejection. The body of the 5 o'clock / 4 o'clock candle on TradingView respected the fair value gap, the 60-minute fair value gap. The next candle, the 6 o'clock / 5 o'clock candle, made a high, made a new high. It made an equal high to the 9 o'clock candle. So the fair value gap candle, the 9 o'clock / 8 o'clock, and the 6 o'clock / 5 o'clock candle made equal highs on the hourly, right? And the body of the candle still respected the hourly fair value gap. Then we got a nice sell-off all the way back down to the daily equilibrium, right? We went down to the daily equilibrium, taking out the sell side, took the sell side out. That daily, that 60-minute candle that went to the sell side turned out to be a SIBI. And that is the 7 o'clock / 6 o'clock candle, turned out to be a SIBI because we created a fair value gap on that huge move down, running that sell side. The very next candle, the 8 o'clock candle, continued to sell down, came down and got into 8 o'clock / 7 o'clock candle, got into this rejection block very nicely. And we continue to go down on the 9 o'clock candle. So we have pushed down. We pushed down past we made it past 50% of the rejection block candle, and we get a nice reaction after that. So we got into the rejection block on the 8 o'clock / 7 o'clock candle. Then on the candle that we're working on right now, we got down past 50% of that rejection block wick, and now we're getting a nice reaction off of it. Now let's drop down to the 15-minute to see if we can get some more detail. Oh my God. What? Hey, my sweetie in here. Hey, baby. How you doing? I'm glad that you came through. Y'all excuse me for a minute. How you doing, baby? Hopefully you had a nice drive into work today. I know you said there was a lot going on with the trees down and all that. But I'm with you all the way. Good morning. Hope you have a good day. Love you much. Enjoy your day. Don't let nobody get on your nerves at work today. Let me stop looking at the chat and go back to what I said. Robinson, leave me alone, man. So let's go down to the 15-minute. Let's go down to the 15-minute. Let's go down to the 15-minute. What time is 9:18? Yeah, we got time. Okay. Like we said, like we always do at this time. Throw your hands up in the sky. Hold up. Let me go back and check something real quick. Go on this 60-minute. Go on this 60-minute. I'm tired of these people giving my trade out while I'm not on the market. See this long SIBI right here? Once we came down and broke that market structure right there. Okay, break that market structure there on that hourly candle. Got to break a market structure. Drop down to 15-minute. All right. Okay. All right. I'll just make sure I ain't missed no trade off of my current model. I'm gonna be switching my model. After watching that clinic, let me tell y'all something for a second. After watching that clinic with ICT, I had already told my wife. I was like, look, I'm gonna be reading these candles like ICT. Like I'm dedicated to learn this price action just like how ICT can read it. I know he's been doing it for 30 years, and I only been doing this since like late 2020. But I'm gonna be reading these candles like ICT. And I know I already said I got my liquidity run reversal, but like it's like my ADD won't let me sit there and just wait on that liquidity run reversal, right? So that's why I got to it's like I understand everything, but just sitting down, watch ICT put on that clinic. It's like I had so many aha moments yesterday, and I'm gonna be switching up my I'm gonna be like ICT. I'm gonna have multiple models. That's what I'm gonna say. I'm gonna have multiple models. don't do the same as little Timmy Rogers. He's a little he's out there. So let's get a little breakdown of the price action on the 15-minute. So on the 15-minute, as you see, when we got that sell-off last night, we came down, took out some sell side on the 15-minute, came down, took out some sell side, consolidated a little bit, push back up, start to move back up. So, and then once we went through midnight, yes, we did. We went down below midnight first. We went down below midnight first and then pushed up. That's when we made the equal high there. And then we started to sell off after making that equal high. We came up above, took out. But considering this area, that will be a poke above the short-term buy side, and then created an equal high, right? Didn't take the external buy side. We came down. This right here ended up having the institutional order flow entry drill. We got the SIBI right there. We got the SIBI right there. Enter on the institutional order flow entry drill right there. And then we sold off, right? Because we had a SIBI that broke structure, right? Another candle here that broke structure, took out the sell side and wicked off, right? Once we took out the sell side, right there, equilibrium came back up to the SIBI on an institutional order flow entry drill, and then sold off heavy, right? Filled in this, completed filling in this fair value gap from yesterday. And then we came down, got into the rejection block. Like I was saying, we pulled down into the rejection block, and now we're consolidating right at the rejection block. I was gonna say we consolidating in the wick, but we're consolidating right at the rejection block on the 15-minute. Right, we're consolidating there. Let's see how this works out with this green candle right here. Let's see if this green candle can keep price down, or if we gonna bust back through and push up before taking out this sell side. Right, let's see how that plays out. Watching that green candle right there to see if it keeps price down, because we've tried 1, 2, 3 times, keep getting rejected off of something here. Let's go down and figure out what we getting rejected off of. What we got? 7 minutes. Go down to the 5-minute. Did it change? Yes, it changed. Same thing over here. The institutional order flow entry drill on the 5-minute also. Only difference is, it's like 2 or 3 different candles. Like this one, and this one. Those the 3 candles, which was one SIBI on the 15-minute, probably one of these 3 candles over here. So out of these 4 candles, there 3 of them was that one SIBI. So I'm thinking it's these 3 was the SIBI right here, right? Those 3 candles was the SIBI, because this was the next red candle right there. And then we entered, that was the institutional order flow entry drill, where it poked up into that fair value gap, then sold off. That's just how it looked on the 5-minute. Excuse me. Same thing, broke structure there, traded back up into it, traded back up into the fair value gap, and then sold off. Now let's go see if we can find out what we are rejecting off of down here. It looks a little heavier on the 5-minute than it does on the 15-minute. Looks a tad bit heavier on the 5-minute, but let's see how it plays out. Let's scoot over Can you scoot over? Nothing too terribly interesting on the 5-minute, outside of the fact that once we bust up through this area here, we got this order block there, but we way down past the mean threshold of that order block right there. Let's go lower. Let's go down to Skinny Mini and see if anything's on Skinny Mini that can help us out. Looking at Skinny Mini. Looking at Skinny Mini. Okay. We got an order block on Skinny Mini that we hit. Didn't quite get down to the mean threshold of that order block, but we did come to an order block on Skinny Mini. So looks like everything is just hit some order blocks and pause for a minute. Hit some order blocks and pause for a minute. Pause for a minute. Yep. Order blocks, order blocks, order blocks. I ain't gonna go through all the time frames. So we hit some order blocks and pause for a minute. Again, I want to see how this plays out with this candle right here. Right here. Matter of fact, I'm gonna put a square around that, a rectangle around that, because I want to see how we play out with this candle right here. Right there. I want to see how, and then I'm gonna put a line on that high, 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 just to see how it play out. See how it play out. Okay, that's all I got. What said? Zeus of Rome. ICT did a Twitter space yesterday after CPI. What ICT clinic were you referring to? Oh, yeah. ICT was on Twitter space yesterday. He talked through the price action all morning. Get out of the way. Tim, it's rejecting Thursday's midnight open. Oh, that's what it bounced off of? What's Thursday, the 12th? Yes, the 12th. What? Midnight? Okay. So midnight. Wait, what? I'm confused. Tim, it's rejecting Thursday midnight open. That's way up here. And Wednesday down there. Help me out, Seawalk. I don't know. I ain't got time to figure that out. So, when I came back up to the 60 minute, pushing back up into this fair value gap right here. We got a huge fair value gap right here. Might be mounting, and then we broke through the high of that candle that I was watching. So this may be mounting up either a small reversal or a huge reversal. Let's see. It's about the market about to open up. So if you're going to trade, please trade safely. If you're not going to trade, please take copious notes so you can go back and study what you traded. I'd like to thank you for tuning into another episode of Tim Tidbits. If you enjoyed the content, could you please subscribe? If you're already a subscriber, could you please share it with someone and say, hey, I really enjoy Tim's content. Even though there's a eraser liquor that be in the classroom, but we really enjoy the content. And I think you'll enjoy it too. Come on over and subscribe. The market is open. The market is open. The market is open. Black Spider Gang. I'll see y'all on the live market watch stream that we're about to start right now. I'll see the rest of y'all tonight on the weekly wrap up. Y'all trade safe, man. Gone.